Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks. I'm Tracey Ryniec, and I'm joined at the chairs by Sheraz Mian for a retail company that's killing it and a construction infrastructure play. Sheraz, we're going to start with you on the construction side, because this is a little bit different than what we've normally been talking about.
That's right. It's Mastech is the company, MTZ is the ticker. It's not a stock for everyone. So if the listener is someone who wants a stable, solid, large cap company paying dividend, it's not for them.
Okay.
This doesn't pay a dividend. It's not.
I thought you were going to say it was for them.
No, it's not for them. It's for those folks who have a bit more stomach for volatility. So this stock tends to move up and down. High beta, meaning if the market's moving 1%, it's moving 2% or more. The business is by its very nature lumpy, so it's a contractor, and let me explain what it actually does. So you mentioned it's a construction contractor. About a third of the revenue or business or cash flows come from the telecom end market. So whether it's the wireline or the wireless, all of their build-outs, the fiber optics, the poles and everything. About half of the revenue comes from the oil and gas industry. So in there, they are building the pipelines and the storage facilities and all of that stuff. And the rest comes from the electric utility industries. They do the transmissions, distribution lines, build out of utilities and all that kind of stuff. So the stock did very well after the election because there was all this optimism for infrastructure spending and everything. And a lot of that spending did actually came through, or the outlook for that spending still remains quite favorable. But Mastech hasn't really done much this year. In fact, it's in the negative. It's down, I want to say 6-7% year to date. And a big reason for that is that this engineering and construction industry, for all of these players, but particularly for Mastech, there's always the execution risk. So you get assigned this major pipeline contract, and some environmental group comes in and they sues the project sponsor because of this or that reason. And that's in fact what's going on with Mastech. They have this major natural gas pipeline project from West Virginia to Southern Virginia called Mountain Valley Pipeline. And that pipeline project has been in litigation. I believe part of the pipeline has now been approved by FERC. Some other part is still being litigated. So there's a bunch of issues, but the outlook for the business is very good. And since the stock has been under this cloud in recent years, valuation is very compelling.
That was my next question.
That's right. So it's trading at around 11 times.
Oh, wow.
The outlook for earnings and revenue, even though they tend to be lumpy, is very good. Backlog, which is a key metric for a contractor like them, is very, very strong. In the June quarter, the total backlog from all these end markets was up like 40-45%, and up from the preceding quarter as well. So if you have the holding horizon and patience to hold it for a year perhaps, then I could easily see this stock being up 15, 20, 30% over the next 9 to 12 months. But in the near term, the stock will move around with the litigation for Mountain Valley.
So it's not for the faint of heart, it sounds like.
It's not for the faint of heart, exactly. So if you have some room in the portfolio for this bouncy stock that you don't need to show results instantly, then absolutely.
My company is Urban Outfitters. That's the retailer that I'm bringing that's crushing it. but they always weren't. And as you know, the retailers were just down in the dumps through 2017. So basically opposite what your company was doing, what your stock was doing. Mine went down, yours was going up, and now it's kind of switched. Because now Urban Outfitters is even at multi-year highs. But that's because they have managed to turn around the kind of depressing comps that they had. And people are buying apparel again. And the thing that I do like about Urban Outfitters, it has its franchise of Urban Outfitters, but Anthropologie has turned it around. They've been struggling for a while, but they're now on trend with their clothing designs, shoes, accessories, and they just had a really good quarter, and I'm expecting this holiday season to be really good. They also both are controlling their inventories, which was a problem for a lot of the apparel retailers. They just had too much inventory, and then when they were off trend, they had to mark it down, hurt their margins, but now they're controlling that better. They've all also improved on their online delivery, so that's no longer kind of like the sad thing that they had going. They're now able to do, even 2-day delivery. Usually it's pretty cheap or free, depending on if you're a, member of their loyalty rewards type of clubs and stuff. But so they're in the game now, and you can really see it in the earnings turnaround. So I brought a couple slides. This is what the estimates are looking like here, and you can see for this fiscal year, they're jumping up quite a bit because this last quarter was really strong, but 59% earnings growth, that's pretty dramatic. Also seeing nice earnings growth expected for next year, but we'll see, because with the apparel, you never know. And a lot of these, the reason I do like Urban too is because they are trying to extend themselves more into the experiences that a lot of the retailers are finding is helpful now to get people into the stores. So they were kind of mocked a couple of years ago when they bought that small pizza chain, because everybody said, oh, what are they going to do, put that into the stores? Well, that wasn't totally the plan, but they have opened up some cafes now attached to their I guess it's their leafy garden type of unit that they have. So it's not many. I think I saw there was only like 3 or 4 nationwide now, but that they're trying to put that out as an extension of the brand too. So we'll see where they go with the food side, but other retailers are finding success doing the experience and getting you to come in the store. So Anthropologie is really pushing that. And I also brought what the chart looks like here, and then you can see the earnings really just skyrocketing off that low there. Now the shares are down off their highs because it's been such a great run here. I think some people are feeling like they're going to take a little profit there off, but it's trading only at 15 times. So I like the valuations here, and as I said, I think they will have a good earnings season going into the end of the year with their holiday sales. That's the big kahuna for the retailers, and with the consumer sentiment now at 18-year highs, then these are the ones I think you want to be in. So
apparel stocks and companies have been doing pretty good. Kors, Lululemon, those are obviously more of the high flyers, but even the traditional ones are doing pretty good. They're good.
Well, as always, we bring you the top stocks every week, so you want to be sure to get them. You can subscribe to our YouTube channel and get all of the videos on the top stock picks there, or you can find us at Zacks.com as well, but be sure to get them because we're bringing them to you. We'll be here again next week with some more top stock picks.